Okay, very good morning, everyone. Well, very good morning, Boris. Thank you very much for joining, my friend. I hope you're
Good
doing
morning.
well. What's the news in the market? Well, first and foremost, let's get rid of that. Sorry for the confusion this morning, but we're here now. Secondly, whilst I'm tr charting this morning, everything's just moving, so there might be a few things out of place. Um, as well as that, let's just start from the top, really. The DXY, it really is. I mean, we talk about it every day. It really is the catalyst. When that thing decides to tank or melt, that's when we're going to get our opportunity. So it just makes sense that we really have our wits about us and we understand where price is likely to go. And then with that, I sound like a broken record, but it just makes sense to emphasize it, right? We forecasted pretty much a rejection from this weekly order block, and rightly so. We were looking to capitalize on that. It's just unfortunate that there wasn't any real pullbacks in the market for us to take advantage of those cross pairs. But the good news is we can already forecast where price is going. So that's pretty much the hardest, well, not so much the hardest, but a great deal of trading in a nutshell, knowing exactly where price is looking to go. So big thumbs up to everyone that was forecasting that DXY push from that weekly, from that refined daily order block here. That's exactly what's happened. Right. So where are we now? So we are approaching that weekly 50 MA. Why does that matter? Well, the last, let's say, month and a half worth of candles, they tried to close above, or at least this candle did a great attempt at doing so, pushed above. At one stage, this was a very bullish candle on the weekly time frame, and it closed down here. So perhaps just based on history, we might get the same. Push into that weekly 50 EMA, search for the liquidity that's slightly above it. We can see exactly where that may well lie, a gap fill. Then I'm looking to refine those points of interest down. I've got a 4 hour order block on the chart, which, to be honest, I'm looking forward to taking off the chart in around about 28 minutes. But even if price does fall back into that 4 hour order block, I'm not really sure that's going to start meaning, well, should we look for immediate DXY shorts? I think for us today, we've been very patient, or for me in particular, I know Boris as well has been very patient in the week. So let's lead with that degree of patience and understand that we're not just trading for a day or for a week. If we miss what we have forecasted, that's fine, right? The great news is we're able to forecast in the direction that that price is traveling, and that's something that many traders just simply can't do. So therefore, patience of the day, or rather, patience will be the word of the day, because there are so many areas where the price could look to reject from. We understand weekly 50 MA, we understand the liquidity that is going to lie above that by way of price wanting to gravitate towards that gap. Then refined, we have a daily order block right up at the highs as well. That would also make sense for price to want to gravitate up towards that area, but that would be a tremendously large daily candle. So am I really expecting these highs today? Not really. What looks more realistic for me is the gap fill. Look for a turnaround on the lower time frames from that gap fill using that weekly 50 MA and then look for a short position on that DXY. Potentially then that could bring us in for a bit of a reversal trade in the opposite direction. Then when the DXY is then looking to short back down here, let's say on the 4 hour, excuse me, on the 15-minute time frame, that's when, of course, we'll be looking for that continuation back up towards that weekly 50 MA. Bearing in mind, we finally closed above that daily 50 MA. So we definitely have that confirmation that price is indeed bullish. It's just a shame that it's bullish now into an area where we're forecasting a rejection from. Hence the bit of the, well, we just have to be slightly tentative about it. It is what it is. That's trading. So we're forecasting this could potentially be the range, looking to reject the daily, excuse me, the 4 hour 50 made to the upside, reject the daily 50 made to the upside, and reject the weekly 50 made to the downside. So it looks as if it's going to be a good trading range. And if you look, let's say, yesterday, for example, so where did we wake up? Let's say London. London had, so London to New York, where did that go? Let's have a look. Roundabout. Excuse me. 50 pips, let's say London to New York. So then if we have that degree of travel, of course, that could then look to take us up towards that gap fill. And then what we can say is New York, when New York then opened, what direction or how many pips did that move? I'd say possibly slightly a similar amount. So let me put price to there. And then London. Well, let me just mark off the whole amount. So London started there, New York, or let's say New York finished there. So we've got 619. So 619 in one direction or half it up. So I think, yeah, exactly. What I'm trying to understand is the likelihood of where or how far the range could potentially be. I could have done that a lot easier on the 4 hour time frame, to be honest. But you see where I'm coming from. What I'm trying to establish is this area likely, or should I start to build my bias around that weekly and around the gap fill, although there isn't really anything there on any of the other time frames. So I think first and foremost, that's my thought process. In 24 minutes, if price closes above this order block, then of course I'm going to get rid of it. If price doesn't close above it, then I'm going to need to identify some breaks of structure on the 15-minute time frame to then have that security that price may not actually look to trend up for the start of the day, because what will more often happen, London pushes price up in one direction or pushes price up, New York would then look to take it down. So if we have London open and then London wants to push price down, we can then expect for New York open to then push price up to where we actually believe price is more likely to go anyway, and then potentially fill that gap. Or completely the opposite, what we had yesterday is London went in one direction and New York pretty much just continued it on. So either way, right? But in order for us to gain the bias, London has to show us its hand first and foremost. What would be nice if we then also just add to the pot that, of course, if we do close within that 4 hour order block and then London opens and starts pushing price down, then that would be it would be all right, to be fair. We'd wait for that break of structure, pull back up into the area of interest that's broken the structure, like so, look for the DXY long, excuse me, DXY short, which could then bring in some of the cross pairs for a reversal long. So we'll have a good look at that and see what we got. But the main element of today is just monitor that DXY. And as you can see by my alerts, they're not too far away. I really want to see exactly what the DXY is pretty much doing throughout the entirety of the day. Pretty sad, I know, but it just makes sense because if the DXY is moving, that's when I should be looking at my cross pairs, not a moment before. And as you can see, that is the reason why, because when the DXY moves, everything else is absolutely melting. So, Boris, before I get going, before I forget, did you had two questions you mentioned about structure, I believe. Feel free.
Yeah, just want to check out that higher time frame bias has flipped now, or it's aligned with the daily trend. On the DXY that was the trend was on the daily was broken. So daily is aligned, 4 hour is aligned, and yeah, pullback and then long continuation on the DXY.
Yeah, absolutely. That would be the higher probable play, 1,000,000%.
Vice versa. On the cross pairs shorts.
Exactly, absolutely. And that's why it was just a bit of a shame to see it push so far, because when it pushes so far, I mean, it's not a shame, but it just means for us to take a position from the higher probable areas at the moment, before I start adding areas in here, you know already that I'm starting from my higher time frame up. So even me putting this 4 hour order block just here, it is kind of in the middle of nowhere. But the reason why I've done that is just based on the fact that it's below that 4 hour 50 EMA. So if price wants to come in to that 4 hour 50 EMA, then we'll look for the liquidity underneath it. But with that said, once the DXY starts to come into any area, let's say even if we were to place a 4 hour order block on the market here, and the DXY then shows us that sign of turnaround, that's when I think we can look to be aggressive on the cross pairs, because it's Friday at the end of the day. We only have the end of today to look for our final sort of push on the DXY after the pullback. And as we know, weekly time frame, we are very bullish. in towards there, and as a result of where we believe price is going to close between the weekly above the daily and also above the 4 hour, I think any of these areas will be quite nice to look for rejection from that and push up. So yeah, you're absolutely right. That's the thought process, and I'm really just hoping London to start with pushes price back down, and then of course when New York steps in, that'll be when, excuse me, New York will then want to obviously push price a lot higher. And then we would have the confluence as well with taking that position that, okay, we've got the gap to be filled. We've got the weekly 50 MA to look to trade towards. I wouldn't really want to reject the weekly 50 MA now. And then lose that confluence because that is a good confluence to actually take the price up. Once we've tapped into every position that we then trade could be sort of, well, is this the higher time frame EMA rejection that we're now going to start trading in towards? So that's, I mean, yeah, long story long, you're absolutely correct. The better play is going to be the long positions, and I just hope that price falls before it pushes. And now, with that said, did you have another question, Boris, or was that it?
No, that's it. Just want to make sure that we are aligned, with the bias, and because the
Yeah,
trend is now formed on the higher time frame is aligned, even on the cross pairs, with the daily
yeah,
aligned, with 4 hour aligned. So I will
yeah,
look to see what happens today. If there will be no trade, there will be no trade. But next week, definitely, I will be DXY long and
yeah,
cross pairs short bias. Then I will
yeah.
short EU, GU, short from 4 hour supplies. Like you said, if it presents the sit up on the 5 or the 15, I will be aggressive.
Yeah, absolutely, because it just makes sense to do it. And something that I've seen on the DXY in particular is that the 4 hour order blocks that they are doing a good job in terms of keeping price above and pushing price away. So once price gets into those 4 hour order blocks, that let's say for example, the reason why I've even put this one in here, it is random. It's not sort of based on the daily or the weekly, but if we just say let's go for a higher high, higher low, higher high, higher low, higher high, come back for the higher low, higher high. It just makes sense based on basic price action, right? And on the 15 minute, you would get that illustration a lot better. So yeah, we're definitely aligned. And yeah, the shorts on the cross pairs are definitely the better bias to take. As opposing to looking for the reversal long. But again, if we can identify when the DXY is looking to actually short, then perhaps a long opportunity might present itself as we then be starting to trade towards the other EMAs. Let's say for on GU, we'll start there. So of course, weekly time frame, we're now in and around that weekly 50 EMA. So of course, we're looking for price to want to reject that EMA and find liquidity underneath it before looking for the push out of it. And what I have on the daily time frame is this date, excuse me, where's that? Bottom right hand chart. Daily order block right down here. It seems an awful long way away. I mean, it is gonna have price is gonna have to drop even further, which would mean the DXY would push slightly higher if we're gonna be looking to anticipate that. However, once you then start to refine those areas down, you can see the 4 hour order blocks again. There are two in that region that again, if I'm going to look for a turnaround in any of those areas, and I'm definitely going to probably look for a long position to take price higher, so long as actually I get a break of structure because I just don't want to trade against that reversal. Particularly that would mean we're automatically looking to trade against the DXY. So if the DXY shows the signs of going short and it matches with a break of structure, let's say on the pair that I'm looking to take, let's say for example, even like that, pull back, which the DXY would have done the opposite, pull back, then of course I'll be looking for that as well. But it has to come from an area. So if GU for me now turns around in the middle of nowhere, I wouldn't then be looking to do something like that because I want to have that higher time frame confluence to support it. And as you rightly said, the higher probable setup is going to be from a short from our 4 hour order blocks or even any other 15-minute area that provides a good looking turnaround from a region. Let's say, for example, price comes into a random 15-minute order block. Let's even just put one on the chart, for example. And then what will happen is, let's say price just pulls up into an area, then starts breaking the structure points that's come back up, like so. Then, of course, that will look to validate a random area in the middle of nowhere. And then at least we'll be trading alongside all directions, i.e., DXY bullish, and also the fact that the pair that we're looking at, we are trading in line with the overall direction. What we can see here straight away without even having to put it on the chart, we've just had multiple breaks of structure. So of course, once we get that, we're looking at now lower lows, lower highs, lower lows, lower highs, pull back for the lower low continuation. So it definitely makes sense. And as you said, if it's not this week, then it will be next week. Trading is a long game, and we all know how to understand where price is going. So it's just about when, not sort of if, because we understand where we need to be. We're just waiting for the setups to come to us, and I believe that is the key to not blowing accounts, looking after your money, and essentially managing risk accordingly. We're just risk managers at the end of the day. And I think, let's say, for example, if you are managing someone else's money, if you're looking for a reversal, for example, you need to have good confluence to then look to take that reversal position, like so. However, if you're managing risk accordingly, and you can quite easily say to anyone that you're managing their money on behalf of, is that, well, the DXY as an index, the primary catalyst that I'm using as confluence was bullish. Therefore, I looked at GU that was very clearly bearish, so I took a short. Even if that short, let's say, is in the middle of nowhere, it is a good risk to take based on the overall direction of travel. So I think it makes sense to wait. However, if you can locate the turnaround in the DXY, and again, looking out the window is always my guide to determine how active I'll be today. It's pretty dull outside, so I'm just going to be monitoring the DXY and just understanding what's going on. And if it doesn't materialize today, then next week or the week after, we're in for the long term. So that's what I've got on GU. Daily order block potentially, if price is driven all the way down that, then of course I have the confidence to look for a long position. In the middle of nowhere, no, I don't. So on the 15-minute time frame, we're right down here, as I've said. So let's put that globally. Where is that? Yeah, so it is a hell of a distance away. And actually, when we start to refine that daily order block down, that 15, yeah, this 4 hour order block is just about inside it. So there's just so many areas as well to look to long from. So a high degree of confluence required on all time frames. But whilst I'm there, what I will do is just paint the scenario. Let's say, just for anyone else watching later, how I would look to tackle this position, let's say on GU, and it would be pretty much the same on all other pairs. So nothing in the immediacy, even if we get a continued, let's say, a snap from the area. Well, that's slightly different. So that's a scenario in itself. If we get a continued snap from the area, and there's no real clear signs of an order block, let's say that's truly caused it. Let's say then, where is a good order block? There's not much going on here. Let's say then price comes up to an area of which is created as a result of a break of structure. Then I'd be looking to take a position from a random area, because that random area has now proven itself to actually take price out of it. So if price comes into that area, I'll be looking for a lower time frame break of structure, and then I'll be looking for that short position down on the buyer side. I'm just trading alongside the general price action on that 15-minute time frame, on the 4 hour time frame, and of course using the DXY, and then looking to the downside, the amount of range. Again, it makes great sense that if price fails to get to this daily order block and those refined areas, then absolutely you've got all the reason to be looking to continue to trade short. So yeah, hoping that the DXY rolls down, give GU that element to pull back up to somewhere. Then if the DXY rolls into a nice point of interest, then of course that, let's say for example, sorry to flip-flop back, but it's good to create a bit of a scenario. Let's say if GU rolls, the DXY rolls, Okay, even here, for example, a random 15-minute order block by the daily 50 EMA. Let's say the DXY rolls all the way down to here. We now have a good reason to look for price to want to reject that daily 50 EMA. We've closed above it, then we look to retest it. There's an imbalance here as well, where we understand that price would want to retest that imbalance on the daily time frame, bottom right hand chart, and then straight away, wherever that may well materialize itself on GU, it's then for us to look for a valid looking entry criteria and setup. So hopefully what that would mean is GU would pull up. But as I can see already, there is no real area apart from up at these highs, this 4 hour order block here, where I'd want to be shorting from. So DXY is going to really be the guide because prices just moved without any pullbacks, and I can't really determine whether these moves are, let's say, lower low, lower high, lower low, lower high, lower low, and I should have an order block here, for example. It's just not clear. The way I see it at the moment is that price has just moved and created a low, meaning that from this point to this point, anywhere in between could be that lower high, and the DXY will tell us where that lower high should be based on where the DXY looks to turn around from. So at the moment, it's difficult to put any areas on the market in terms of the pullback, other than the most obvious one, which is here based upon that 4 hour 50 MA 4 hour order block that's been caused as a result of that first bearish engulfing candle that completely broke structure points. Hence why I put it in on the market. And what I mean is just this area here. There was a clear hold up in the market from this area where price has made a high from. Price has been driven completely through that by way of this candle in particular. 4 hour order block, does it make sense? 4 hour 50 MA, does that make sense? Of course. Well, price was respecting it, price broke through it, price retested it on its way down, pull back up. I'll be looking for a short all day long. If not today, then certainly next week. It makes good sense. So that's where we are on GU. And yeah, the longs, I've got an alert there. It's just something I'm going to have to look at when price gets there. So that is GU. AU. Okay, so AU, we were looking at shorting AU. Uh, it feels like months I've been talking about this bloody weekly order block, but finally we're getting the move out of the area. Now, I'm not sure if, well, I'm definitely not looking for a long position. Although I can understand where a long position could well come from, I can't. I've said that over and over again. You guys are bored of hearing it. But what I am happy to take now, even more so, because don't forget, when we're up here, we're only looking at the session highs, and of course, I do like a session high trade, but again, I needed the confirmation, and then once I had that confirmation on the 15-minute time frame, price had already moved. So let's have a look what I mean first and foremost. So this area here is that session high, which really is just an eyeball of all the high areas in the market, and you just seek to place a bit of an a box around it and understand that price is trending out of this area, but price isn't breaking above it. But what I was looking for is price to break some intra time frame perspective, which means just the 15-minute time frame, and then pull back. So what I couldn't understand, or what I didn't have yesterday, was just that. So where were we yesterday? Here. Price was up at these highs. By the time we started to break any areas, let's say even here, we didn't come back. So therefore, this is why this element just remains pretty much untouched in the market. So I recognize my best short position is going to come from those highs. But again, just like on the DXY, we understand that the DXY could roll short at some point, pulling price back up on AU. And then it's for us to understand, well, as a result of AU now finally breaking structure, creating a first, and I don't mean to the left here, I mean in terms of most recent price action, price was doing nothing. We've now had that move. So the way I see it is a low is now created. So again, just like on GU, after a low that's come from this area, so this is now the lower high confirmed after a lower low. The lower high can be anywhere anywhere here until price actually breaks above that area. Now, of course, we know based on smart money concepts, the best position to wait for would be here, the area that actually caused that move in general. However, using the DXY, just like on GU, we will seek to understand where price is going to turn around if we feel the need to do so. If we can't be bothered, or if it doesn't make sense, then again, we just wait for price to come up to this better area and look for confirmation and look to short. That, I mean, doing that next week would make great amount of sense as well. So that's what I've got really for AU, shorts only for me personally. But if you guys aren't concerned about this weekly order block, which I won't give my opinion on. You're more than welcome to trade as you wish. I can definitely understand why from this 4 hour order block you'll be looking to take that position. But what I would say is be just a little bit mindful of it. We were respecting that 4 hour 50 MA really nicely. And the better scenario would be that price respected this area here and you just traded the range up. However, what I can say is that if it wasn't for this weekly order block, then of course I'll be looking for my confirmation on the 15-minute time frame, and I'll be trading up to the 4 hour 50 MA where I then expect the rejection. So don't be too disheartened if you don't take the long, but certainly understanding where the shorts could come from, it might just be better to wait for the short position. Me personally, I am definitely going to be waiting for the shorts. And it's just as simple as that, to be honest. And if price continues to short, then great. All that will do for me is just continue to break structure points where I would understand where long positions would come out the market. I'd much prefer price to just break these areas as the DXY continues to push bullish, and then just expect that at some point in time, price is going to pull back. I'll look for the short. And again, just on that topic, don't forget when you're back testing and you're clicking through all of these candles, we would, and I know the majority of you guys listening, if price was just here, you'd say, right, price is now looking bearish. Using all my higher time frame analysis, let me click through a few more candles to see if I can get price to come back there. That's exactly what we'd be doing if we were back testing. Therefore, just because it's the live markets, it doesn't now mean that you have to take the long all the way back up to your short position, then short down. It's just trading, right? We just take it nice and easy. It's one of the easiest things that you can master, just so long as you have that plan in mind. We already understand where price is likely to go higher time frame. That's not going to change this week, considering this current weekly candle doesn't close bullish above that weekly order block, which is very unlikely looking at what the DXY is looking to do higher time frame. So therefore, by the time we get to the charts next week, you would have clicked through a few more candles. They will start to print. And by next week, if prices was already all the way up here, then great. Very, very, very little for us to do next week. Price has already done what we need it to do. And we'll just be looking for entry, setup, or rather setup, entry, and execute. So that's what I've got for AU. And that's pretty much it. Unless, Boris, you want me to go through the long positions a little bit more in depth, I will. But if not, then I'll be happy to skip to the next pair that I'm actually looking to trade. Just
Ah,
let me
I'm good.
Cool, no problem. Just let me know anyway. So that's AU. GCAD, GCAD,
I'm
GCAD.
watching this GCAT and
Yeah,
interested in a
exactly.
long.
Exactly. So GCAD is a pair that actually it makes sense to trade, and we can understand why. Look at that weekly candle now. So judging on everything we've just spoken about, we were expecting the weekly 50 MA to do something today. There's only 14 hours and 1 minute left. We have range up to the daily 50 EMA where price actually closed below yesterday. So that's also, it's a good confluence that we're going to be looking to fill the imbalance. There is a daily order block here, so we'd be looking to short from that area. So unlike the fact that on AU, we said, well, it might not make sense to take it long to then look to short. It absolutely here makes sense to long it based on the fact that we're currently trading below the weekly 50 MA. It's the perfect position where we want to be in, recognizing that that weekly 50 MA, it is going to try, well, price is going to want to try to trade back towards it. Even if it fails to do so, it is going to try. that means our long position makes sense, providing that the setup also makes sense. So when we've got that, so that's the weekly time frame spoken about, then we're looking to identify nice points of interest to start refining, looking for the long. There's nothing on the daily, but that's fine because on the weekly, excuse me, on the 4 hour time frame, we do have something. And the 4 hour time frame, I think that looks not beautiful. I would much prefer there to be just one area, but here is an area nevertheless. And you see my alert is right there. As soon as it taps that 4 hour 50 EMA, if I get a turnaround, even before it gets the refined area, if I get a turnaround, I will look for a long position. Depending on, let's say, if it's even in New York, knowing that, okay, I no longer have 14 hours for price to want to reject that weekly 50 MA. I've now got, let's say, six. I would look to be aggressive because if I have the opportunity to do so, then I absolutely will. And that opportunity, without zooming back into the chart on the 15 top right, top left, you can see there is a structure point in the market. As price continues to print down, well, I'm just going to start moving that structure point lower and lower and lower based on the lower high that's been created. The moment I get a break of the most recent lower high and there is an order block available, of course, I hope that it isn't that distance away from my refined area because then that would be me a little bit impatient. But that in itself is a good enough reason, in my opinion, today in particular, to look for that position. Now, of course, the better play, in my opinion, would be price come down into the refined area. You can already see that that is the lowest area within that 4 hour order block. And also, if price wants to load, that is, well, from that era, we can say we broke structure at some point. But most importantly, I like it because it's the lowest part of that 4 hour order block. And as I always say, a refined area, look to refine and take the position from as low as you possibly can for your most high probable setup. And also, it leaves you no question where you want to be putting your stop loss. Very easy. Just put the stop loss underneath that order block and give yourself some breathing room. GCAD maximum of 20 pips. In my opinion, that would do the business. And then you've got the range, the weekly 50 MA. That's just, in my opinion, that would be management if we were to get there. And then, of course, I'll be looking to close it out by the daily as a result of a previous candle closing out below that daily 50 MA. So I like GCAD a lot. Let's see if price will just continue to print bearish down. And while I'm there, let me make that slightly bigger so I can just get a better understanding of what's going on in terms of longs. I need the 4 hour. Have I missed anything in and around the area? Hmm. So what's the reason for the
I have a
wick?
question here.
Yeah, go for it, man.
Like you had your crosshair now. Yeah,
Yeah,
a
just
little bit
there.
lower, a little bit lower.
Yeah,
Yeah,
just
this
there.
was the low. This was the low on the 4 hour that gave the high.
Yeah, no, absolutely. And I
So
was,
now the liquidity was taken with current 4 hour candle. The area was mitigated. That's why the liquidity was taken below the low.
yeah.
And now the liquidity was taken from the early buyers, I should say.
Hmm.
Um, 4 hour candle is printing for now, all right. So
Yeah.
if price return to the low again and leave a 1 minute shift for the long,
You'd be in, or you're asking me.
I'm asking you.
Okay, so what I would do in this instance is, so as I don't have my base, as in I currently, let's say if we paint this scenario now,
We just have an engulfing candle, but it didn't broke
yeah,
15 structure.
didn't
It
break
just
structure.
broke if you look on the 5 minutes, it broke some areas, but nothing in particular. Um,
Yeah, true. I mean that would definitely be, so if you were to refine that area
this would
down,
this would be the setup that I would take at some point in
yeah.
time.
I mean, I could understand why, but that for me would be what I would class an aggressive type of position, which you guys know
Yeah, yeah, very, very
I
aggressive.
don't mind aggressive positions at all. And that's why as soon as I saw that wick, the first thing I wanted to do was, well, understand why is that happening? And as you saw, I put the crosshair there, and then you mentioned that that's exactly where you'd be looking to trade. So What I would do, and your method of looking to take it that way, it also does make sense. It's a risk that can be taken, particularly if this area is holding and what we got, well, we've got good enough time for price to want to continue rejecting that area as well on the 4 hour. But what I would be looking for in particular to take it is if I get that a break and then the pull back into that area, even on the 15. So that would be where I would be maybe in the position a little bit even maybe sooner than you if price doesn't actually pull back for your 5 minute order block. So if price breaks this area here, pulls back to that 15, then I'd look for a lower time, very aggressive shift just to get the cherry on top of the cake. And then I would definitely look for that long position, 100%. And I would just have to understand and I acknowledge that, well, you know what, there is definitely reason for me to lose that position, but that's trading. There is always a reason to lose. But I think that the confluence to take it makes a lot of sense, especially if you were just to put, even forget calling it an order block. You could just say that this area in the market just here was a clear previous session low. And if I'm looking at taking the session low, how I'd look at taking session lows is quite aggressive. So anything more than my standard aggressive session highs and lows, which more often than not, as you said, bullish engulfing candle, 15-minute order block, wait for price to pull back into the area, I would take it. So anything more than that for me is already a trade worth taking. So the fact that I'll be waiting for a break of structure pullback, then take it, means that for me, I definitely would take that position because technically, if London opens now, which is going, well, it's London's open, more often than not, I would take that position as a session low. It's just the fact that it's quite old price action. If this was here now and I've got that shift, then I'd look to have taken that position as soon as price comes in. So I'm going to wait for a break personally, but your element, you're just doing the same on a lower time frame because for you, you've already got, let's say, the break on the 5 minute. If you have your structure point already here, for example, and then your order block is just slightly lower. So you're doing exactly the same as what I would be looking to do as well, but you're just going to take it on the 5 minute time frame. So it also makes sense. You're just going to be getting in the trade, I don't know, slightly earlier or potentially slightly later than me. So it's pretty much exactly the same. So for you, you've got your structure point, I guess, here. Oops, and then you're just waiting for a price to pull back. You'll look for the long. And then for me, because I have my structure point here, I'm literally just waiting for exactly the same of what you've already got, break of structure, pull back into a higher order block, and then look for the long. So we're both aligned on that. And I think that it just makes sense to look for a long position. And as I know you're comfortable with taking losses, it's just one of those that, okay, it's a good trade. It makes sense to trade from that area. Prices in that area have had a beautiful looking rejection candle on the 4 hour. And let's face it, even if this, let's paint even another scenario. Even if this 4 hour candle, current 4 hour candle, doesn't pull back at all, and all we get is breaks of structure, then great. Even better reason to then look to take it aggressively from the 15-minute order block, which is slightly higher because the setup is now confirmed. We'd had a beautiful looking 4 hour candle close. Let's say it even closes slightly higher. And then as you can see, closing higher is just breaks of structure on 1, 5, and 15-minute time frame. As soon as price comes back, I mean, in fact, to be fair, if price does that, I'll set a limit order on the 15. I don't really see why not. It's just going to be a managed position.
Definitely,
Do you know what I mean? It's just a position. We're trading,
definitely.
and we're trading the best looking setup. We're not looking to take reversals or longs on AU into weekly order blocks. We're not looking to anticipate a GU or an EU turnaround. I think GCAD is providing a very nice opportunity, and if it loses, then it just is what it is. I mean, it's just going to be 1/4% for me. a loss, and that's, it's just trading, right? So yeah, if I get a nice break, that's going to be a limit order, and I'll put that there now. And what I'll do if I rename that alert for something better, where are we? Oh, this is all different. No crossing, no value. Okay, I used to be able to put text on this. I have to do it on my phone. Message. There we go. Limit long. Easy. Cool. So that's pretty much GCAD. I think it looks good. It does look good. And with that said, I mean, the DXY can pretty much do what it wants for GCAD to materialize. I think GCAD looks nice. Yeah, that's really it for GCAD. And while we're there, it's just going to be the same protocol on all other 4 hour areas. It just makes sense to take a long position from that area for on the pair itself. And then on the shorts, for me, I can't short anywhere else aside from up at these highs. So it's just one of those, unfortunately, with GCAD. But as I say, I think the longs look really nice at the moment. So that's GCAD. UCAD. We can use UCAD as a confluence for GCAD. So what I mean by that is if, and I think I've got this right, if UCAD short, GCAD should, in theory, look to long. Uh, that's the general consensus of the both of those. So looking at UCAD, despite thinking about the DXY potential longs, we recognize that after a push in the market on the DXY, we are potentially due a pullback. That's just the basics of trading. And the 4 hour did close above, so I'll get rid of that. Nice. Let me go back to the 15. And as I said, after a push, we'll get a pullback. So UCAD, let's say UCAD doesn't get to its desired area, and where GCAD is looking to go long, UCAD may well turn around anywhere just based on the fact that the DXY wants to start going short. That's what we're seeing now. UCAD for me isn't in an area where I'd be looking to take a short from based on my higher time frame analysis. But certainly DXY, if that's looking to short now, then absolutely UCAD is going to give us a move to the downside, and GCAD is just going to break structures towards the upside. So we're not necessarily looking to trade a UCAD short, which I don't think I'm interested in based on the fact that, well, the 4 hour we're breaking structure points all the way towards the upside. We've broken above the daily 50, yeah, we've broken above the daily 50 MA. So therefore, I know that my best probable position is going to be price to roll back to look for the long. That's fair to say. But just because I understand that price is looking to roll back for the long, it doesn't mean I have to take the short, because the short is going to mean that I am anticipating DXY weakness. I don't care if the DXY does short. It doesn't mean that I need to take that short, but it does mean that I need to be in the market for the long. That makes sense based on 4 hour 50 MA, based on daily 50 MA, looking to take price higher, and we have room towards the upside currently of looking to trade towards the weekly 50 MA. So if UCAD comes down, great, I'm looking to short. And what's good if UCAD looks to come down, then GCAD, that should be going up. So perfect analysis to look at a pair that actually I'm not going to be trading, but can I make sense of the fact that I want GCAD longs? Can I find confluence across any other pair that GCAD longs is going to make sense? And straight away, for me, that now makes GCAD make sense. So looking at UCAD, I'm not going to go over the short position because I don't believe that that would be a longer term short position coming from this area. But what we can understand as well, price is looking to short at the moment. So I'm going to have an alert there. And more often, probably likely, if we get a break of this structure point, even though it's not a clear point in the market, but what we can understand is there has been a slight high. We could say it two ways. Either the high has been created from, let's say, this area, which is probably the best take, meaning that the structure point is going to be here, Or what you could say is the fact that we're looking to take GCAD aggressively is that if we get a break of this sort of sub level, certainly on the 50, on the 5 or the 1 minute, this is definitely a structure point, i.e., higher high, price come back down, higher low, higher high confirmed. So then if you get a break of this structure point, GCAD will also break the structure points of the highs, pull back up into an area of interest, and that would be a short looking position on UCAD, which more importantly, that should look like a good opportunity long on GCAD. So, yeah, not looking at shorts. I don't think there's a reason to short it just yet. But certainly looking at the longs, then maybe next week this would be still a valid area in the market, or who knows what can happen today. Any unexpected news could drive price right back down to the areas. DXY up at those highs could just be driven all the way back down and then be looking for a nice long position based on the DXY strength coming out of the market. And if price does get here today, again, I will be very aggressive. There's be a couple of ways just to run through it quickly for us all. If price trends down on the 15, then of course the best opportunity, wait for the most recent lower high to be broken, give you an order block to trade from at the lows, look to take price higher. And if you're looking at that aggressively, it's the same aspects on the 1 minute time frame. But of course, you've got a couple of choices on the 1 minute. You could look for, of course, well, it's just exactly the same, but just on the 1 minute time frame. But the difference would be looking at this, then of course that's a bullish engulfing candle on the 15-minute time frame. Getting a break of structure on the 1 minute time frame may not be a break of structure, excuse me, a bullish engulfing candle, or it might not even be a bullish candle on the 15-minute time frame. It could just be a wick. And that is the reason why it'd be aggressive, and you'd have to manage it accordingly and understand that your entry is based on the 1 minute. Therefore, you have to manage it based on the 1 minute, like my trade yesterday on AU. I took an AU Asia range long based on the 1 minute break of structure. Therefore, I'm managing it aggressively on the 1 minute break of structure. I recognize that there's an imbalance towards, well, against me, of which drove price into the low anyway. Therefore, I must manage my position by the area that I believe price could potentially, after that low, pull back lower high, lower low continuation. And it's as simple as that. So if you're going to take aggressive positions, manage them aggressively and just understand that price hasn't fully developed yet. Therefore, you may just be stopped out break even. But there definitely should be an opportunity to move break even, taking an aggressive position. It's just whether or not, as a trader, you're sharp enough to understand, right, now I must go break even. And it's difficult because, of course, sometimes you don't want to move to break even, especially when you take a glance at the 15-minute time frame and the 15-minute candle hasn't really done anything. And you're just thinking, oh, great, I will just be stopped at break even as soon as I hit it to break even. But that's risk management. You've got to do it, or else you'll just get into the realms of taking aggressive positions. Price just makes lower low, takes you out, and then what you will find is you'll then get the bullish engulfing candle anyway. And then what you could have done is just wait for that imbalance and then price pull back, take the long the correct way, or not the correct way, the less aggressive way. So good reason to take a long. That's what I'll be looking at. I would take that aggressive as well. Take anyway because it's a Friday. Whatever presents itself to me on pairs that make sense on a Friday, I will take without any hesitation. So that's UCAD looking at the longs. Boris, were you looking to short it? Do you want me to go for a short scenario?
No, no, I'm more interested in the GCAD.
Yeah, exactly. I'll be quick running through these. So EU, what do we have on EU? Again, it's just going to be much like GU, to be quite honest. Is it worth looking at a long position in the middle of nowhere? For me, absolutely not. So to be honest, it could be one of those that we're just going to have to wait on for price to pull back for the higher probable looking short position in line with the EMAs that are now in favor. And of course, it looks like price is going to be driven down towards that weekly 50 EMA. Hopefully not today, because what that will mean for EU is that EU would have traveled a tremendous amount. Let's say, where was EU this morning? Here. So we'll be looking for, well, not too much, but 100 pips. Yeah, I mean, it seems like quite, actually, no, the daily range is about that, to be fair, on EU of late. So if we look at yesterday's daily candle, no, 55 pips. So yeah, we're looking at double the range if today wants to get to, that higher probable point of interest to look for price to actually turn around. So maybe what could make good sense is, let's say yesterday's daily range was around 55 pips. Let's say that definitely could look to pull us up towards an area. There is a 4 hour order block just there, which for argument's sake, I will put it in there, just so if price comes up to that area, we can monitor it to see if, well, does it make sense first and foremost on the DXY? But knowing that the DXY long term, we are looking for that continued bullishness to come out of the market. If we do get that 55 pip move back up into this 4 hour order block, then of course we'll be looking, well, look at that. Nice. I think that looks very good on the 15. Have the lower low, lower high into the market, lower low created, price come back into the area, supported 4 hour 50 MA, 4 hour order block, daily 50 MA, looking to take price short. Very aggressive, I could be based on that. Do we have a 15-minute order block within that area? No, I'm looking here. Nothing, 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 nothing there. A bit low in my opinion, so we've not really refined that area down. So I will put it on there, but I'm definitely not anticipating to take a position from this area. But again, it must be said, the DXY is bullish. Therefore, if we come up here, that's DXY weakness coming out the market. We have every reason to look for a short position to trend in line with now what we see a clear break of structure where we would be looking to anticipate price to hold in that area. And just like on GCAD, I'm just going to double check myself to see if there's anything that I may have missed. But what we can see is, of course, if this was an order block, or just call it a session low, we've now broke through it. And more importantly, we've broke through it on the 4 hour time frame. So I'm not really looking to take a long position using any confluence like we have on GCAD. And then it raises the question, well, if you've got a choice between taking a long on GCAD or a long on EU, what are you choosing? All hands down, it's a GCAD trade. Although they look fairly similar, and you could probably argue the two and say, well, actually, we could use the wick imbalance here from that area. Price, of course, pushed up from that area. I'd look for some confirmation to take the long. Well, I would much rather do that on GCAD, which makes, I think, in my opinion, makes a lot more sense to look to do. So, yeah, I'll be waiting for the short, to be honest, and I'm not really interested in the long. As Boris said, GCAD, to be honest, is the best. So I'll have a quick check on GCAD. I believe we would have had break of structure on the 5 minute even more. Yeah, perfect. Hasn't rolled back just yet, so good stuff. That's EU, to be honest, team. Looking at shorts only, and I think that's very realistic short to actually look at today. Let's see if we can have price roll back up and then look for the short. Let's have a look. What I'll do, I'll put that next to GCAD. And if I can't get GCAD, then I would have a look at EU. Let's have a look. US dollar CAD. I think we've spoken about UCAD, haven't we? Yeah, we've spoken about UCAD. I'll only be interested in longs. Yeah, we've spoken about UCAD, I believe. And then GJ. So GJ is something that I would consider again, right there at the bottom. Why? So the weekly time frame is not really helping the cause at all. I'm going to be looking to trade long into a weekly candle that's looking like that. But that's fine as long as I can build my bias to give myself good reason to take that long position. So daily order block is holding beautifully. Continued rejection out of that. First and foremost, well, secondly, rather, we've got good range back towards that daily 50 MA, where now there is an order block as a result of yesterday's daily bearish candle closure. So that's a good management area, or at least a good target to look to close the trade out before that area. So that's in favor at the moment as well. The order block, as we mentioned, holding price to the high. So, of course, I want to be looking in those areas to see if I can find a good looking position. 4 hour time frame. No order block, unfortunately, but that's also fine. So as long as we can make it make sense on the lower time. Well, what's that? Bit. Let's have a look. Where is that? Where is that? So right there at the lows, still within the daily order block. So I'll put it on for a moment and we'll just see, does it make sense on the 4 hour time frame? Oh, excuse me, 15-minute time frame. Let's have a look. Just there. Let's go to the 15. Okay, a bit low. Right, so initial thoughts on GJ is that so last week, that's wrong. Last week there was a 15-minute order block over here, but it was just massive. It really was huge. It was where is it gone? So price pushed up. So there was a candle. Yeah, humongous as a result of that wick. So it's there all the where are we? All the way down to that wick. So that was the 15-minute order block. And of course, bullish engulfing candle or bullish candle, order block behind, price came in, didn't come back. See you later. Thanks for taking part, GJ. So refine that order block down. This is now my 5 minute that's been on there all week. Price is now gravitating towards it. You can see my alert is just there, kind of poised and waiting. So not looking again, no immediate positions because I don't really have any reason to just yet. But certainly from that area, what I can see and say is that we have broken, let's call it immediate structure points just here, for example. So what I should put on the market is we've had a break of structure here now. So what that's telling me is, well, if price comes back down to an area that's broken structure, I should be looking for a position from that area. Now, it's a lower time frame order block. Therefore, you guys know I want to build my foundation first and foremost. And my foundation will come from a 15-minute order block. Now, with that said, there's a couple of ways. Well, really, the only way I can have a 15-minute order block is the fact that price gives me a bullish 15-minute candle, or better still, bullish engulfing. I sound like a broken record, but again, I won't be taking this position before price comes into this order block because this is where price made that move. We have the information already there. So just a little bit of patience, wait for price to come back in. Then two options. So clear structure points as price is starting to be driven down, creating those lower highs. I'm going to draw it on lower low, lower high. We could say lower low, lower high, lower low. So here's a structure point. Now, of course, the best structure point is going to be here. So we'll put that on as a key structure point. And then essentially, when price comes into that area, I'm going to want some structure points to be broken. Again, I recognize I don't need to take that position in a hurry. Although I want to trade, we don't have to trade, right? It's down to us. So I will take this, let's say, in inverted commas, aggressively, but I do want a break of structure to happen. And via that break of structure, what I'm going to need to have is a 15-minute order block to trade out of. So I'm going to need to see a bullish engulfing or a bullish candle at some stage coming out of that 5 minute order block, then price come back down. I think that's just a nice looking position. Let me just double check myself on all the other elements. And again, it's pretty much just trading a range. So trading a range, the important part of trading a range is waiting for a structure point. We're not just going to look for immediate position longs because we recognize how ranges are manipulated and we have all that evidence there based on those wicks. So anyone that has not seen or not taken in consideration the wicks here and just trading the candles, well, you can see exactly why we wait for breaks of structure. If you wait for a break of structure towards the upside on a 15-minute time frame, you're very, very, very unlikely to be taken out of a trade prematurely, because all those what that wick is suggesting is liquidity grabs, or I very rarely talk about because waiting for your break of structure should, particularly on that 15-minute time frame, stop you from being in that type of environment. Cool. So that's what we have, team. Not much, but definitely good enough to concentrate on a couple of pairs. So GCAD, GJ for me, and then if I don't grab GCAD or GJ, then I'll come up with a conclusion about what's better, EU or GU. So GU at the moment, as I said, in the middle of nowhere. EU, you could argue the fact, taking a long position, let's say, from there as a result of that wick. So it might be one that I'll consider, but it's definitely the third down. So I better put this in order first and foremost. So DXY, GCAD at the top, GJ second, and then we'll go EU last, and then of course AU short. But let's have a look, double check to see how far that is. Are we going to load? No, that's not too far. So I will put AU shorts there. So we'll go GCAD is the favorite for the day. Then GJ, second favorite. AU, but it's definitely green. And I'll give EU a bit of an amber. That's what I got, team. Boris, thank you for joining me all week. Appreciate your
Thank
attendance,
you.
man. Good luck today. I'm indoors pretty much most of the day, home alone, dog sitting, so we shall see how the day gets on. Thanks for joining, Boris. Take care, my friend. Appreciate you.
Thank you.
All the best, everyone else. Take care.